shares of the Campbell's company trading higher after the company released latest earnings. Let's go to Robert Moskow. He's analyst at TD Cowen. Thanks for joining us today.
Thank you for having me.
So where did the company do well?
Well, their results were not great, and the guidance is not great either. It's for a significant decline in EPS, double-digit decline for fiscal 26. What you're seeing in the stock today is that the buy-side investors expected something even worse. I think that the whisper number, so to speak, was probably around $2.30. This guidance at the midpoint is closer to $2.57. So it's still a decline, but it's not quite as bad as people thought, given all the issues on tariffs and margin pressure.
Okay, talk to me about tariff exposure for this company.
Well, there's three different things. Two are definitely materializing. The third is not so much. The biggest impact is on steel cans, which goes into their soup business, and that's probably 2/3 of the margin pressure for the year. Another element of this is on an imported product that they make in Italy called Rayo spaghetti sauce. That tariff is in there. And the third, I'm happy to say, was expected to be on tariffs to Canadian exports. Those tariffs are no longer a factor.
Okay, so let's go to some broader moves in this sector. We know consumers have moved towards less processed foods. Is that something that is hurting them or continues to hurt them?
Yes, particularly in canned soup, which is probably 25 to 30% of their profits, rightly or wrongly. The consumers are perceiving canned soup as overly processed. It doesn't have the wholesome whole food ingredients that they're looking for, and that's been in structural decline for a long time. And then secondly, they have a big snacks business. Probably 45 to 50% of their sales are in snacks. Health and wellness concerns have been around there for a long time, but I think the bigger issue there is GLP expansion. The more people are on GLPs, the less salty snacks they eat.
Interesting. Has a company tried to pivot to other products that perhaps incorporate where the consumer has been going?
There are healthier snack products within their snack portfolio for sure. But in my view, they're not enough to really move the needle. So there's limitations to how much they can really pivot in this regard. So portion control is a big element of their marketing strategy. Trying to revitalize the Goldfish brand, which is their best brand within snacks. They're making a little bit of progress there, but there's still declines. That's where the priorities are. Okay,
so let's also talk about discretionary spending versus staple spending. They're a staple, I would imagine, as a grocery product, but there would be other options and other competitors. Is a whole sector been pushed down by the movements we've talked about, or are some of their competitors doing better for different reasons?
Oh, yeah, the whole sector is under extraordinary pressure. You just look at the stock prices of Kraft Heinz and General Mills this year, ConAgra. I mean, there's double-digit declines in the stocks. And in general, these companies have all had to reset their earnings base materially lower in order to fund more price investments for the consumer to improve the value equation, and also take into account quite often tariff costs that they can't pass through. Their ability to navigate through changing consumer needs and health requirements is compromised by a lot of legacy brands that have been around for a long time. It's hard to change consumers' perceptions of these brands.
You have a hold rating at this point, a price target of US $29 for Campbell. Do you think there is room for improvement? It kind of feels like there might not be from what we've talked about, but what do you think?
Well, I've been cynical and skeptical for a very long time on packaged food stocks in general. We're all looking for an inflection point, or at least a floor to valuation from which to get more constructive. it is difficult to see it in the retail tracking data that we have. So there's certainly a lot of work ahead to get there.
Got it. All right. We will leave the conversation there. We have Robert Moskow, analyst at TD Cowen. Thanks for your time.